Alrighty, lads. I don't mean to come off as a wee little girl or anything, but I've got a couple things I want to get off my chest, as well as cover a little bit of the new indicator. God, that's fucking rusty. I really got to work on that one. It's a lot of fun when you start to get into the fucking swing of it, but when you have to talk quietly and a little bit more slow, it's a little harder to keep up with the fucking the. All right, I'm not gonna push it. That was okay, but I'm not gonna push it. All right, let's talk about the new indicator. Um, there is a rant that will coincide here, but that's going to come out at some point without any warning. All right. So I'm going to turn off the snippy snipe and going to do this. Okay. So the indicator, the new indicator, all is about volume. Volume is a very, not just very, but probably the most important indicator that you could ever pick, or piece of data. I think that if someone told me, you know, here's 25K and you can only use one indicator to trade, right? You know, if I were put into that situation, I would probably pick VWAP. No, I'd pick the snippy snipe, but truthfully though, VWAP is probably one of the most undervalued indicators that exists, and even beyond that, just volume in general, because volume is where you get to paint a picture for supply and demand, but also with that you can determine direction. Volume in itself is most of the time agnostic, but when you get the feel for it and when you can develop a, I don't know what to describe it as, but you'll start to understand where price levels are, where you have buyers, right, and where you have sellers. And it sounds really rudimentary for me to say that, but just hear me out. If I just simply bring up a volume indicator, the fuck, I couldn't scroll for a second, and I get rid of everything else, and we just have volume. And you go to the daily. Now, a market profile, or a volume profile is also what it's called, would be even more ideal. But to keep the point, just by volume alone, you can see where people want to buy and where people want to sell. Now, in theory, right, just because they want to buy doesn't mean that they see value in the stock. It could have something to do with covering a position, but it could also have something to do with hedging, rebalancing, a whole entire myriad of reasons. But to get to my point here, throughout this entire trend on AMC, if I can find, yeah. So this entire trend that this experienced, shit, you fucking retard. All right. So I'll just leave it at that right there. If you look at the volume, you can see that you had a point of buying around here. This was a particular level where value was sought after, and then a lot of selling, and then buying kind of stepped back in. Let me highlight this. So this particular period right here, a lot of buying, a lot of selling, and then you kind of had this linear fall off of supply and demand, and then the unfortunate decline that took place after liquidity within that region. Liquidity, real quick, just to define it, is just the level of friction between buying and selling. If you have an illiquid asset that you're trying to sell, then you're going to have to sell it for lesser value than what it typically would be sold for if it was liquid. It's just how convenient is it to move something, convert something to a different instrument. How easy is it to do that? So throughout this entire period, though, you had a relatively low volume phase, this entire blue rectangle, with the exception of this impulse. But everything after that, you kind of just ping-ponged back and forth throughout all of this with lower volume than what you would typically expect, especially after the move that preceded it. And then you had this sell-off that took place after we escaped from this particular era. That's where you see the volume kick in, and the direction is taken to selling, and that kind of set the precedent going forward, where you had the sell-off all the way from 22.54 to as low as 5.99 post ape. So it tells a story, and again, ultimately, all you're trying to do when you're trading in the market is to find the story and then see if you can get ahead on the plot before it happens. So to continue this little part of the lecture, we had that surge in volume of selling, but the ranges began to constrain. The highs weren't as high and the lows weren't as low, and then before you knew it, you had what is just a giant descending wedge that took place, aka David Schillerino's favorite pattern. As you can see right here, we had a descending wedge, and then eventually you had a volume pop, and the direction was decided intermittently afterward to be bullish. And then after that, you didn't really have any more buyers. And so you'll then, after this phase right here, right, you had another surge in volume. It was ascending in a linear fashion, as you can see. You could draw a trend line to this even. But eventually it topped out, and for obvious reasons, a halt doesn't really help. But then you had this very slow sell-off that took place over the span of a couple weeks. The volume was low, and then eventually you found a buyer right here. As the selling intensified, you eventually had a buyer, and yada 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 yada. So the whole entire point of volume, though, is to decide what is the value to the overall market based on supply and demand, and supply and demand casts its shadow via volume. So with all that being said, let's get into what the indicator does, right? So we've established the themes of volume and why it's important. So this new indicator, the name of it is under the Kronorium suite, and it's called volume breakouts, or you might also see it as volume-based regime changes. And the whole entire point to this thing is to pick up on where you have buyers and sellers stepping in, not only stepping in, but in a way that you can anticipate going forward. Because volume is like, it's very ambiguous, and everybody has their own way of interpreting the tape. But what I was looking for when I wrote this was, how do you preemptively detect when a particular party or a particular regime or just any collection or single individuals begin to process aggressive bullish orders and aggressive bearish orders. And I would say it's done a pretty damn good fucking job. So let's get into that real quick. With that philosophy being in mind, I can't explain exactly what it does, because then I'm giving away the secret sauce. I'm giving away the fucking secret sauce, and you can't fucking be doing that when you're doing shit like this. This is fucking magic. So, but to say what I can, though, there's three components here to look at. You have these blue and red arrows, right? Blue pointing up means that you have a bullish impulse of volume, and the red means you have a bearish impulse in volume. You have this new feed of orders being processed hitting the tape that deviate from what is expected, not only within the range, not only within the range of price, but also within the behavior of the volume thus far. You also have these yellow flags up here. These appear whenever you have a volume anomaly. There's no particular direction that is detected whenever you see this. It's agnostic, so it's neither bearish nor bullish, and that's where you have to consult the current trend and perhaps moving averages to decide what it is you think that means. So we had one right here on this candle, right? And obviously the trend is going upward. We're approaching, or we're breaking out of a resistance if you look back a little bit. So it was fair to assume that this was bullish, and of course that's what it was. And right before that, you had a bullish alert go out. So this isn't so much of a tool designed to act on immediately. It's more so just like what direction is the tide going in, so to speak, is the way to think of it. Because you can have signals that go out that normally I would say might be false positives or they might be premature. But after looking into this more and seeing how the code translates to the chart, I think it's more so that it's telling you in advance where the tide is shifting. So yeah, the blue arrows, the red arrows, and the yellow flags. I'm also going to pull up this down here. This is a visual representation, so to speak. Anytime that you have the blue crossing the white, which I won't disclose the values of, you can, if you're familiar with any form of coding within PineScript or charting, you might be able to kind of tie it together. Blue is obviously bullish, the red is bearish. The white, though, won't disclose that formula. But anytime you see the blue go up, that means a lot of buying coming in. And anytime you see the red going up, that means a lot of selling coming in. If they correlate inversely, as in if the blue is going up and the red's going down, that's where magic happens. And that's what happened back here in March. You can see that literally at the bottom of this entire, I want to call it a trend, but I'm also kind of angry at just that price action of that time in general. But during that, the bottom, you could see that selling and buying were beginning to reverse, where selling had been gradually increasing and then started to fall off, and buying had been gradually decreasing and then started to pick up. And eventually you had the two cross, where you had a bullish convergence. That's where the beauty of this comes in, because you can see that the direction of the trend is now transitioning between buying and selling, and it's now flipping bullish. Selling is going down, buying is going up. So the unfortunate part is that you wouldn't really be able to tell that that is a factor with just a linear, one-dimensional volume indicator down here. So that aside, the whole point of this is to decide where the tide is going and the direction of it, and then depending on whether or not I release the graph version that you see down here at the bottom, you could also determine the velocity of it, but that's a conversation for another day. So you have a handful of inputs here, a price look-back length, which has to do with the trend, but not quite the trend. That's all I can say. The volume look-back length, which is how many pieces of volume to consider for every calculation. The golden alert threshold, which is a work in progress. And then a trend look-back length, which obviously involves the trend. The whole entire thing to look at here is just where the direction of volume is going. So I'll switch to the 1 hour here. And you can see instances like this where going into opening bell, you had a bearish volume alert go out and an unusual volume alert go out, as you can see up here. And then you had, this gradual engulfing going on in the bullish direction. Where the fuck is my brush? But then another bearish volume alert. And then you dipped. I think this was earnings, actually. But then going back into it, Why did it not fucking put out a bullish one? Oh, because there wasn't a cross. Oh, okay, that's a bug. I gotta fix that. There would be a bullish alert right here. But even nonetheless, just going back in time, you can see where this is signaling to you that there might be some presence of a lot of sellers or a lot of buyers before the trend on the chart will show it. Yeah, we'll go to like smaller time frames too, and you can see right away that you're picking up on things that traditionally with a vanilla volume approach, volume indicator approach, you wouldn't have. Yeah, it's pretty simple. It's pretty simple. The only complication that you would experience is how you want to interpret what the indicator is outputting. If we go to SPY, we'll go to the daily. All throughout here, you know, it's one of those things that it's giving you another lens to look through. Like, you know, this is a bottom right here. This signal was obviously pretty late, but I'm guessing this was a low volume push down to start, and then it intensified. Back here, and then you had a low volume sell off. Back here, you know, this is kind of your preemptive signal, but depending on how you interpret that, you know, you had another one follow up, and then that's where the decline began, and another, and another, and another, and then another decline, and another. Back here, you know, catching the bottoms here, catching the bottom here, catching the bottom here, sort of catching the bottom here, catching the bottom here, catching the bottom here, catching the bottom here, on the way back up, but also on the way down. A little late on catching the bottom, but still did. Another catching the bottom. This could have alerted you to the sell-off of COVID, perhaps a little early. Yeah, so some pretty cool shit has come out of this. And obviously, you know, I've come to the realization that I kind of, you know, as the developer to these things, I develop these lenses of looking at what the indicator is outputting differently than people who didn't develop it. And it's unfair of me and foolish of me to assume that anyone else sees it the way I do. So I'll be making another video that covers what's going through my head between the sniper and this new indicator, so people can get a better understanding of what to look out for. But other than that, just the signals the way they are, I think is a fantastic start, and it's already doing wonders for my trading because now I can confirm trends. The beauty is when you mix it with the fucking snippy snipe. Like, this shit is just fucking crazy. Like, you bottomed out on accumulation back here, and you get the volume alert. A little slam down, but still held the accumulation, and then you get the alert going out here. Same thing back here. You're stuck in the middle of this range, so you know it seems like it could go either way, but then you get the bullish volume alert. Same thing back here. Like, in theory, if you caught it here, you could have cashed in on 156 fucking % move just from this alone. When, you know, on the outside, this looks like you're about to fall over even more of that whole range. You know, told you to sell here, here, here. Right here was a buy. You know, just tons of really fucking cool shit that comes out of this. But at the end of the day, it's all, you know, just a giant lens or multiple lenses of interpretation, and hopefully this is something that gives everybody a new way to look at the chart. Yeah, it's pretty fucking sweet. It's pretty fucking sweet to say the least. So, TradingView for some reason took it down when I first put it up. So this will be going back up on TradingView tonight. Just go to my TradingView profile, tradingview.com/thatguyastro, I think. And you can find the indicator there once I republish it. And then you can even search for it when it's republished. Yeah. Stay black.